What's going on, everyone? Happy Monday. Hope you guys all enjoyed Super Bowl weekend. Kind of getting back into the charts here, just taking a look at the triple Qs intraday. So when I, really take a look at the triple Qs, it's because predominantly I'm trading stocks like Amazon, nvda, Tesla, Apple, Google, these mega cap tech stocks. I kind of use it as my gauge. I need to see, where's supply, where's overhead supply at, and where's the demand at. Where are we currently sitting, and what happened last week on Thursday and Friday? We had that a lot of selling pressure, to be honest, and the Bulls really lost a pivotal level of support that they needed to hold. If we just kind of go back, we just kind of go back 2 weeks ago here when we had this initial breakout rally from this 4 day, 5 day long consolidation down here. You can see, if you remember this week, this is going back 2 weeks, 3 weeks now. We were stuck in that range between that 335 from the lows to that 354. And we were pretty much just going up and down and up and down and up and down and up and down. It didn't seem like you could really get your feet under you. And yes, it provided opportunities to both the long as well as the short side. It just made things very, very frustrating because it seemed like nothing was holding. It seemed like, you couldn't really hold a position longer than 5, 10, 20 minutes without things kind of reversing on you, getting stopped out. So you really had to, dial down your position sizing. You had to expand your risk a little bit to allow these stocks to move a few points up and down before you kind of stop yourself out. It was just tough. So when we got out of this range here, we really broke out and we tested and reclaimed that 200-day moving average at this point, and we put in a high of $371. So when we started to pull back, what I was looking for was to see, can we hold that 200-day moving average as support? And quickly the Bulls gave it up and we lost it, and we got a news headline and we got Fed talk from Bullard talking about getting to 1% interest rates by July. We have Ukraine and Russia news, and just the whole market is just so news driven right now that technicals are really getting smoked. They're getting blown out of the water. So you have to do your best to stick to your rules and kind of play in the momentum with the trend. So, if stocks are green to start the day, you need to be looking for longs. If stocks, start to get weak and they stall out midday and things start to roll over, it's not a time to say, "Hey, you know what? Well, let me just hold my position. I'm up on my position. Let me just continue to hold it. It's just a pullback." No, because that pullback, can be a complete intraday reversal and those stocks can end up going red. It's like it's a very tough market. Here's the best advice that I'm going to give anybody right now, especially if you're a newer trader. Okay, stay cash flow, stay patient, and pick your spots accordingly. When you get into a position, whether that be you're shorting a position or you're going long in a position, okay? And if you don't know what that means, if you're going long, that means you're buying stocks with the anticipation that they're going higher. If you're shorting, either you're shorting stock, equities, or you're buying put options, you're betting that the stock is going lower, okay? If you're doing this, either side of the market, you need to make sure that if the move starts to develop in your favor, take your money off the table. If that's what the market's giving you this hour, this, you know, before lunchtime, this 15 minutes, take your money off the table because nothing is guaranteed. The market doesn't care if you're long or short. The market doesn't care about the stock that you bought. It does not matter. The only thing that matters is ending the day either profitable, which means in the green, or flat, okay? Last thing we want to do is chop ourselves up, take a winning day into a losing day. Last things we want to do is, tell yourself, hey, I believe this is the bottom. Let's buy stocks. They're too low. Things are going to bounce. And the next thing you know, you're getting your face ripped off, and vice versa. Meaning that you don't just want to come in and say, the market's a short. The market's a short. The market can rip 1, 2, 300 points on the NASDAQ futures and, take your face off for 1, 2 days in a row as well. So the levels that we're really looking for here, this 367.69, the 200-day moving average on the daily time frame, is definitely a big level that we're going to want to take into effect. The level that we really needed to hold last week was a 350. I was hoping that if we came back into this zone, right? On Friday, we came back into this zone. We had touched it one, almost two, three times. It was also acting as a level of resistance back here. I was hoping we got into this zone and kind of chopped around and started to bounce. That would be a good hold for the bulls and going along, going forward into this week. However, we lost this zone, and after hours and pre-market, we've kind of been consolidating sideways. Now, right as the market is opening, we had a good little flush, and then we kind of seen a nice bounce starting in the pre-market today, Monday the 14th. Happy Valentine's Day. We got a good bounce, right? There was definitely some plays that we could have taken to the long side. For example, Tesla's been one of the strongest stocks of the day. Amazon's also been very, very strong. Um, I took a play on Tesla long today, and I'm going to do another video. So if you want to see, my entry and exit and as to why I took that play, definitely subscribe, stick around to my channel. I'll show you guys what I was thinking with that. But I profited just over $2,000 on that trade. I only held it for about an hour and a half. So the market provided some opportunities to get long early. But now it's starting to get weak. Now it's starting to stall out. We got lunchtime, volume is starting to slow down. Are we going to hold this level and kind of just bull flag it out, right? Are we just going to hold this level, bull flag it out, and then tomorrow rip higher? That's 100% possible. We do have room to get back into 355. That would also present a day two bounce for a lot of tech stocks. So if we're looking for confirmation to go long, or you're more comfortable buying stocks to go higher, you don't just want to buy because, hey, we've had a good morning. You need to wait for the confirmation. And your confirmation is not going to come until tomorrow. So if you're looking to buy long and you're not currently sitting in a position right now, you cannot just start buying here without confirmation, because tomorrow this flag can break down and now you can be sitting upside down in your position. Okay. Maybe if you're looking to short stocks and you're looking for the market to kind of fade out, you can use the day's highs at around 351 as your stop. As long as the stocks continue to stay weak and they continue to fade, you can continue to hold that short position. You would use the day's lows as your stop, which is 342. So you have plenty of room that you can play with in this channel to the downside. There's plenty of room to scalp to the downside. If things don't continue to push higher today, there's room to make money to the downside. Now, just be careful about holding these positions overnight, because even though you may short something now with a couple of hours left in the market, it's not to say that overnight and pre-market tomorrow doesn't gap something up. We don't know. Everything is news related driven right now. We are under macro levels of supply. In my honest opinion, what the charts are telling us is that the Fed and everything else is going to keep us pinned below the 200-day moving average and around the zone that we're at now. So I would call it 335 on the Qs, 365, 370. Okay. That's taking us up to the 200-day moving average, and that's taking us back down to our previous low demand zone here. So even though it is 30 points and it is a big range, and it's kind of like, well, how do I play this? Well, you're basically shorting at the top of the range, covering your position in the middle. And then if we break down through that middle zone, you would take another short position and cover into demand down at 335, 340. When we get down into 335, 340 and we start to bounce higher, you would take long positions, play those back into the middle of the range, and depending on what we do when we get there, whether we get rejected, you can fade those stocks again, or if we do confirm, you can now play them back to the top of the range, which is into the 200-day moving average. And that's exactly the way the market needs to be played right now. There is no other if, ands, or buts about it. We don't need, to be sitting here, talking about stocks going to the moon or the market going to zero, because as of right now, the market is not showing us either of those things. Okay. 1-2 days worth of rally does not indicate that we're going back to all-time highs. Just like 1-2 days of selling does not mean that the stock market is going to zero and we're going into, the next Great Depression. Okay. Right now, we are in a big range. There's a way to play it, and there's a strategy that you can use to play it, but you have to be an adult about your money, okay? You can't sit there and be prideful. You need to just continue to be smart, play the technical levels, and if you happen to get stopped out or the stocks do not do what you are looking for them to do, you just need to quickly exit those positions. Okay. There's always going to be another trade. You're always going to have that next opportunity. Okay. Last thing you want to do is get into a position on Monday and be holding it 80% in the red on Friday. Okay. Definitely don't want to do that. Again, just to recap, the levels that you're looking for, obviously anything over 367 on the Qs, which is 20 points away. And I know that's a lot, but anything over 367 on the Qs is going to be reclaiming the 20-day or the 200-day moving average. Okay. The bulls, that's what they really want to happen. If you're an investor or you're a bull, you're a perma bull, you want to get back over that 200. The moment we can get back over the 200, a lot of stocks are going to start to run. Now, where we're at currently right now is coming into the bottom of this range that we've held. If we're going to get another leg down, okay, what we would be looking for was it's going to be a washout, a new low below 335, and we're going to want to wait for the bounce. We're going to want to wait for the bounce once we crack below 335. Once we crack below 335 and we get some sort of bounce and the market is showing us continued weakness, then we can continue to start taking short positions there on the second pass through, the second confirmation of the breakthrough of 335. Guys, I hope that helps. Definitely stick around, subscribe to my channel, join my Discord. That link is down in the description box below. And please, 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 please give me a thumbs up on this video. I'd highly appreciate it. It'd help my channel get out to more people. And I'll see you guys all in the next trading video.